Imagine a world where Wall Street giants like JPMorgan and BlackRock aren't just testing crypto, but actually moving their core businesses onto Ethereum. Now, picture Ethereum's value exploding, flipping Bitcoin and becoming the backbone of a whole new trust-based economy. Sounds crazy, right? But that's exactly what Fundstrat's Tom Lee and Ethereum co-founder Joseph Lubin are saying. Stick with me, because by the end of this video, you'll see why some of the smartest people in finance think ETH could be the trade of the decade. Tom Lee is a well-known Wall Street strategist and head of research at Fundstrat Global Advisors. He first got attention back in 2019 when he told investors to put 1 to 2% of their portfolio into Bitcoin, back when it was only $5,000. Now, in recent interviews, Lee has shifted his focus to Ethereum. Joseph Lubin, co-founder of Ethereum and CEO of Consensus, says he's 100% aligned with Lee's outlook. Both of them believe that traditional finance is about to hit a turning point. Instead of spending billions on outdated infrastructure, banks and asset managers will lean on Ethereum as their trust layer. That means staking ETH, running validators, and writing smart contracts for everything from loan to stock trades. This isn't a wild guess either. JPMorgan has been experimenting with private Ethereum networks since 2014, and BlackRock has already started buying ETH for its treasury. Lubin argues this shift is inevitable. Lee takes it further, saying Ethereum could become the backbone of global finance, flip Bitcoin, and possibly deliver a 100x return. Before we continue, here's something interesting for you. Crypto trader Apex lets you trade both crypto and tokenized US stocks 24/7 with no KYC and no withdrawal limits. Use my link in the description to check it out. Alright, let's break this down into 4 key moments that explain why Ethereum could be the biggest trade of the decade. Lubin's point is simple. Banks run on old, clunky systems. Moving to a shared Ethereum layer could save them money and make things far more efficient. But to do that, these institutions would need to stake ETH and run validators. Instead of buying Bitcoin as digital gold, they treat ETH like infrastructure, the same way companies pay for cloud servers today. We're already seeing signs of this. BlackRock has reportedly bought hundreds of millions worth of ETH. Companies like Uniswap and Frax Finance hold large ETH treasuries to earn staking rewards and have a say in governance. Tom Lee says Wall Street has basically already decided on Ethereum. His big point is that ETH has had nearly a decade of uptime with no major failures, and that reliability is what institutions want. Lee isn't just throwing numbers around. He's laid out scenarios where ETH's future price, near-term $4,000 to $6,000, longer-term $15,000 to $16,000. That's a massive climb from where ETH was in the early 2020s. He even compares today's Ethereum to Bitcoin in 2017, just before the world woke up to its potential. His reasoning is tied to new industries like AI and the idea of corporations holding ETH as treasury capital, similar to how MicroStrategy has been hoarding Bitcoin. He's even called ETH the macro trade of the decade and expects the Ethereum-Bitcoin ratio to retest highs from 2017. Lubin and Lee don't just see Ethereum as a cryptocurrency. They call it Trustware, a base layer for agreements in a future where humans and machines interact seamlessly. Lubin says trust itself will become a commodity, and Ethereum is the most decentralized version of that commodity. This is why they're not worried about Layer 2s cannibalizing Ethereum. In their view, scaling solutions like Linea and mechanisms like proof of burn will only boost Ethereum's economic activity. The more that settles on Ethereum, the more demand there is for ETH as gas and collateral. Here's the reality check. A 100x return takes massive capital inflows and a lot of trust that Ethereum can keep its security intact. Lee admits he doesn't have a timeline for this prediction, and markets can turn brutal fast. Regulators could slow adoption, and rival chains like Solana or Cosmos could grab market share. Even Ethereum's own internal debates, things like staking rewards, MEV, or roll-up economics could slow growth. But overall, the big picture looks strong. Banks want cheaper, faster systems. Regulators want more transparency. Ethereum offers both. Lee even revealed that his partners already hold billions in Ethereum and want to accumulate up to 5% of the total supply. If that happens, it's a massive anchor for price. Big banks running ETH validators or launching their own Layer 2 networks. That would confirm Lubin's thesis. Clear rules from the SEC that allow banks to hold ETH on their balance sheets. A green light could unleash trillions. Scaling tech like Linea's proof of burn or new rollup solutions proving Ethereum can handle Wall Street-sized volumes. And of course, the macro backdrop. Interest rates, AI investments, and stablecoin growth. All of these will impact how fast institutional money floods in. So, could Ethereum really 100x and even flip Bitcoin? Tom Lee and Joseph Lubin think it's possible, maybe even inevitable, if finance moves on to decentralized rails and trust itself becomes traded commodity. Whether that plays out or not, ignoring Ethereum right now might end up being the most expensive mistake of the decade. If you enjoyed this video, make sure to hit that like button, subscribe to Captain Altcoin, and turn on notifications so you don't miss our next deep dive. And I want to hear from you. Do you think Ethereum really has a shot at flipping Bitcoin? Drop your thoughts in the comments. I read them all. Thanks for watching, and I'll see you in the next one.